Yesterday, the energy market demonstrated a spectacular rise followed by a stunning slide. Gas prices in Europe first rose almost to the level of $2,000 per cubic meter and then fell to $1,250. This volatility can be attributed to the statement of Vladimir Putin on the introduction of certain instruments to influence gas prices. In particular, it was about conducting spot trading for oil and gas. The news is great, but its implementation, alas, is long-term. That is why price fluctuations are largely due to a logical rebound in prices after their rapid growth. Another factor contributing to the decline in oil prices was an increase in U.S. crude oil inventories, more precisely the absence of its deficit for the second week in a row. This could not but affect the quotes and prevent a rise in prices. And now let's move on to a more detailed analysis. Brent oil futures are currently experiencing a correction. Since the early trade, the price has plummeted to $79 per barrel. However, analysts are confident that this decline will hardly be long-lasting and the price will drop to $77–78 per barrel at most, and then the quote is expected to resume its bullish run. As for US WTI crude oil futures, yesterday the price managed to get close to the psychological high, the level of $80 per barrel. Then WTI collapsed by $4. For now, this trading instrument is also experiencing correction. According to analysts, the price will extend losses up to the level of $75 per barrel. At the same time, its growth potential remains. If the price is able to consolidate above $78.50 per barrel, crude oil will most likely gain upside momentum. Meanwhile, the situation in the foreign exchange market is also uncertain. The US dollar is gaining in value against major currencies. Nevertheless, the Russian ruble has been trading in a corridor for almost 3 weeks. Moreover, it seems that it's in no hurry to leave this range. This can be attributed to the euphoria in commodity markets. A decline in gas prices has had no impact on the Russian currency, while high commodity prices continue supporting the ruble. However, all this does not help the currency advance. The ruble's potential has been exhausted. Thus, the Russian currency is expected to suffer losses in the near future. Furthermore, macroeconomic indicators are just making things worse. In particular, the inflation rate increased to 7.4% from 6.7%, while the forecast was 7%. Therefore, once the energy market returns to normal, the ruble will most likely drop considerably. This means that the Russian currency will not be able to advance up to the 72 mark. As for the euro-ruble currency pair, the situation remains stable. The euro-ruble pair is steadily creeping downwards. Over the month, the single European currency has lost over 3.5%. As a result, the pair entered oversold territory. This may lead to a short-term technical correction, analysts do not rule out. Therefore, the ruble has every chance to extend gains up to 83 rubles per euro. Well, the past day has been full of dramatic ups and downs. The energy market seems to have survived choppy trades, and the ruble was the only one that remained almost unchanged. However, investors are still in a euphoric mood, which means that commodity prices will most likely extend gains, but after a logical correction. That's all for now. Thank you for watching and stay tuned.